stock.CFRA Research Senior Equity Analyst Angelo Zino joins us now with more in Nvidia's quarter. And Angelo, it's great to see you. Listen, so Nvidia reports, unsurprisingly, we're bouncing all around here in the after hours, but give us your immediate reaction, response to the print, Angelo.
Yeah, I mean, thanks for having me. So as far as the quarter was concerned, I mean, looked great. I mean, I think we were looking at 33 billion going into the print. So, I think the company guided, a couple of months ago at 32.5 billion. So, the numbers were incrementally going up kind of into the print here. And then they kind of posted a number that was, about 2 billion or so above what the expectations was. Clearly the guidance, I would say, is it was above what we expected. We were looking for 37 billion, but you've kind of got this game now where, you kind of have to beat the street by at least 1.5 billion to 2 billion. You didn't get that as far as the guidance is concerned. I personally would not be worried about that. What we've told investors out there is we expected Nvidia to kind of be a little bit more on the conservative side of things as far as the guidance was concerned for the January quarter, just because this Blackwell launch is kind of the shift towards this platform-based offering, and listen, it's a very complex chip to make, and I think you have to kind of err on the side of caution here if you are kind of that management team, and if you over deliver in come February. So I think this is the right move in terms of the guidance. I don't think you should read too much into it. I think all in all, this is these are pretty good, strong results.
And Angelo, the CFO commentary came out as well, and they say in there both Hopper and Blackwell systems have certain supply constraints, that we know, and demand for Blackwell expected to exceed supply for several quarters in fiscal 2026. So does that sort of match what the market has been expecting? How do it sounds like you think that NVIDIA's sort of managed expectations pretty well.
Yeah, I mean, listen, we had actually written, I think, in our preview on Monday that we expected Blackwell delays to persist through the end of calendar 2025. So that kind of goes in line with, I think, the commentary that Jensen had made. He had made, comments just several weeks ago about kind of the insane demand that they're seeing for Blackwell. So we know this. We know the demand is strong. We know the demand is there. We know the revenue is going to be there. So again, it's one of those things as far as the guidance for this quarter is concerned, probably has more to do with some of the supply constraints and them kind of being a little bit cautious on the launch side of things. But yeah, I mean, as we kind of start seeing this ramp in the April and July quarters, and we believe a nice step up in terms of the revenue trajectory there, given that this is again kind of this platform-based offering out there, these rack solutions, then you're going to see kind of significant improvement in fundamentals. But yeah, the supply constraints will persist. It'll probably hinder them from kind of selling what they want to sell, let's say over the next 6 to 9 months. But still, I think it also provides some very good visibility out there for investors looking out over the next 12 plus months.
Angelo, we know, listen, the big cloud giants have been spending. That's great news for NVIDIA. Do you see that simply just continuing at pace, Angelo, for, is it 12 months out? Is it 18 months out? What do you estimate?
So, I think what we've said is, we believe we're going to see sustained demand. So, and I think that is kind of the key question out there is how sustainable is the spend out there from these hyperscalers. I think I quickly saw in the release, I think about half of data center demand this quarter came from your cloud service providers, your hyperscalers out there. So, it's a big number out there. These hyperscalers making them a huge chunk of their data center revenue. And, when we kind of think about, going into 2025, again, I mean, we're looking for the growth rate to decelerate, but high teens growth, let's call it, 15 to 20% growth out there is still a very, very good growth rate out there. And when you look at the share gain potential that NVIDIA has within kind of the wallet share gain potential on the data center side of things, we think they can grow at least 2 to 3x what that growth number is in terms of the data capex growth number is, and potentially even more than that. So at this point in time, when you kind of look at the spending levels, we think it is sustainable, which is what is key through 25, and I think more importantly into 2026.
And just to put some numbers on what we've been talking about here, revenue was up 94% year over year to that $35 billion number we've been talking about. Data center revenue specifically was up 112% year over year. Angelo, as you look at the stock reaction today, pulling back a little bit, if you're an investor in the market and you're trying to figure out whether you want to get in here, is there any reason not to buy Nvidia right now, especially as you see it pulling back?
Yeah, listen, I think as far as Nvidia is concerned, I mean, if you told me what I thought would happen to the stock, my initial reaction would have been it probably would have pulled back just because of the run we've seen into the numbers here. Now, when you kind of think about, the expectations or the outlook over the next 12 months, we continue to see upside to where those expectations are. But more importantly, are there risks out there that could potentially, cause this stock to potentially underperform over the next 9 to 12 months? I think there are definitely risks out there. I mean, we're kind of, entering kind of a new administration here going into 2025. I think what happens from a tariff perspective, how, trade kind of looks in terms of, what happens, what does the Trump administration do with kind of, on the semi side of things, and more importantly, these leading edge technologies. I think is going to be extremely important to kind of keep an eye out for. What happens with Taiwan over the next couple of years, also, something to kind of keep an eye on. But, if you're an investor out there and you're kind of looking to get into the name, the fundamentals of this company, the free cash flow potential of this company, we think will continue to be absolutely enormous and exceed some of those expectations out there. And as a result, I mean, we continue to have our buy recommendation and do recommend investors to buy on those pullbacks.
Angelo, thank you so much. We're still sifting through all these numbers. We'll be listening to that conference call very closely. Really appreciate your instant analysis.
All right. Thanks for having me.